This presentation is for Chapter 5, Cost, Volume, Profit Analysis. In Learning Objective 1, we will learn how to determine how changes in volume affect cost. Some costs change as the volume of sales increases or decreases. However, other costs are not affected by changes in volume. Managers need to know how a business's costs are affected by changes in volume of activity, such as number of products produced and sold, in order to make good decisions about the business. The three different types of cost managers need to manage are variable, fixed, and mixed cost. Variable costs are costs that increase or decrease in total in direct proportion to increases or decreases in the volume of activity. Volume is the measure or degree of an activity of a business action that affects cost. In other words, the more volume, the more cost is incurred. Using Smart Touch Learning as an example, the direct materials that are used to make the tablets are a variable cost. For example, each tablet requires one battery at a cost of $55 per battery. This chart shows the cost for batteries at various levels of activity. As you can see, the total variable cost of batteries will increase proportionately as the number of tablets produced increases, but the battery cost per tablet does not change. This exhibit shows how total variable cost for batteries increase as the number of tablets produced increases from 0 to 100. If Smart Touch Learning does not produce any tablets, it incurs no battery cost. Therefore, the total variable cost line begins at the bottom left corner. This point is called the origin, and it represents 0 volume and 0 cost. The slope of the variable cost line is the change in battery cost on the vertical axis divided by the change in the number of tablets produced on the horizontal axis. The slope of the graph equals the variable cost per unit. In this case, the slope of the variable cost line is $55 per tablet. So the graph shows that the total variable cost of batteries varies directly with the number of tablets produced. But again, note that the per tablet cost remains constant at $55. In contrast to variable costs, fixed costs are costs that do not change in total over wide ranges of volume of activity. Some common fixed costs include rent, salaries, property taxes, and depreciation. This graph shows Smart Touch Learning's depreciation on the manufacturing plant and equipment. The company has these fixed costs regardless of the number of tablets produced. Smart Touch Learning will incur $13,000 of fixed costs each month, and the number of tablets produced monthly is between 0 and 100. As we can see, fixed costs are graphed as a flat line that intersects the cost axis at $13,500. Because Smart Touch Learning will incur the same fixed cost regardless of the number of tablets produced during the month. This chart shows the total fixed cost at various levels of activity. Note that the total fixed cost does not change, but the fixed cost per tablet depends on the number of tablets produced. If Smart Touch Learning produces 25 tablets, the fixed cost per tablet is $540. $13,500 total fixed cost divided by 25 tablets. If the number of tablets produced doubles to 50 tablets, the fixed cost per tablet is cut in half to $270. Therefore, the fixed cost per tablet is inversely proportional to the number of tablets. In other words, as the number of tablets increases, the fixed cost per tablet decreases. This slide summarizes the characteristics of variable and fixed cost. Total variable costs change proportionally to changes in volume. As volume increases, total cost increases. When volume decreases, total variable cost decreases. However, the cost per unit is the same. It remains constant. Fixed costs remain constant in total. However, they change inversely to changes in volume. When volume increases, cost per unit decreases. When volume decreases, cost per unit increases. Not all costs can be classified as either fixed or variable. Costs that have both variable and fixed components are called mixed costs. For example, Smart Touch Learning cell phone provider charges $100 per month to provide the service plus 10 cents for each minute of use. If the cell phone is used for 100 minutes, the company bills Smart Touch Learning $110. $100 of fixed cost per month plus the variable cost of 100 minutes at 10 cents per minute. This chart shows the cost for the cell phone at different levels of activity. This exhibit is a graph that shows how Smart Touch Learning can separate its cell phone bill into fixed and variable components. The $100 monthly charge is a fixed cost because it's the same no matter how many minutes the company uses the cell phone. The 10-cent per minute charge is a variable cost that increases in direct proportion to the number of minutes of use. So if Smart Touch Learning uses the phone for 100 minutes, the total variable cost is $10. If it doubles the use to 200 minutes, total variable cost also doubles to $20 and the total bill rises to $120. When companies have mixed costs, it's helpful to separate the cost into the variable and fixed components so managers can use the information to make planning and controlled decisions. An easy method for separating mixed costs into variable and fixed components is the HighLow Method. This method requires you to identify the highest and lowest levels of activity over a period of time. To illustrate the HighLow Method, we look at the maintenance costs for Smart Touch Learning's manufacturing equipment. Looking at the data for the year, we can see that the third quarter has the highest level of activity with 480 tablets produced, and the fourth quarter has the lowest activity with only 240 tablets produced. The HighLow Method is used to separate mixed costs into their variable and fixed components using that highest and lowest activity levels. So we're going to use the HighLow Method, which requires 3 steps to estimate Smart Touch Learning's fixed and variable costs for the manufacturing equipment maintenance. In step 1, you identify the highest and lowest levels of activity to calculate the variable cost per unit. So we had already identified the highest and lowest activity levels in the previous slide. Now we're going to use that information and the cost associated with it to determine the variable cost per unit. So in the numerator, we are going to have the change in total cost. In the denominator, we're going to have change in volume of activity. So to determine the numerator, we're going to take the cost associated with the highest volume and we're going to subtract the cost associated with the lowest volume. In the denominator, we're going to take the highest volume and subtract the lowest volume. So the highest cost was $1,960 and the cost associated with the lowest volume was $1,480. The difference in those is $480. The highest volume was 480 tablets and the lowest volume was 240 tablets. The difference in those is 240 tablets. So we take $480 in the numerator, divide it by 240 in the denominator, and we get the variable cost per unit of $2 per tablet. So now that we've calculated the variable cost per unit, we're going to be able to use that information to determine the fixed cost in step 2. So in step 2, we're going to use an equation and solve for total fixed cost. So we already know that total mixed cost is equal to total variable cost plus total fixed cost. If we want to solve for total fixed cost, we can take the total mixed cost and subtract total variable cost. So at the highest level of activity, the total mixed cost was $1,960. We can calculate the total variable cost by taking the $2 per tablet and multiplying it by the number of units that was associated with that total mixed cost, which was 480 tablets. So when we multiply $2 times 480, we get $960 of total variable cost. When we subtract that from the total mixed cost of $1,960, we get the total fixed cost of $1,000. Now we could have done the same thing using the lowest volume of activity. Either one of them will still produce the same amount of total fixed cost. So now, using the variable fixed cost per unit and the fixed cost, total fixed cost, we're going to be able to determine the total mixed cost at various levels of productivity in step 3. So in step 3, we're first going to create and then use an equation to show the behavior of a mixed cost. So we know that total mixed cost is equal to total variable cost plus total fixed cost. So if we know the variable cost per unit and we know the total fixed cost, we can take any number of units and estimate that total manufacturing maintenance cost. So let's take an example. Let's say we want to know the total manufacturing maintenance cost for 400 tablets. We can take that $2 per tablet, multiply it by 400, and that gives us total variable cost of $800. When we add that to the fixed cost of $1,000, we now would know that total manufacturing maintenance cost for 400 tablets would be $1,800. It's important to remember, though, that fixed cost and even to some extent variable cost will remain constant only over what we call the relevant range. So in this graph, we see the fixed cost for Smart Touch Learning over 3 different relevant ranges. If the company expects to produce 2,400 tablets next year, the relevant range is between 2,001 and 4,000 tablets, and the managers will plan for a fixed cost of $162,000. If they produce more than 4,000 tablets, Smart Touch Learning will have to expand the company. This will increase total fixed costs for added rent, supervisory salary, and equipment costs. Total fixed costs would increase to $243,000 as the relevant range shifts to this higher band of volume. Also, we can see if the company expected to produce fewer than 2,001 tablets, the company would only budget for $81,000 of fixed cost. Managers would have to lay off employees or take other actions to cut fixed costs. We need to remember, though, that costs are classified as fixed or variable relative to some activity. However, if the frame of reference shifts, then the classification can also shift. And that is the conclusion of the demonstration for Learning Objective 1.